Good afternoon, everybody. All members from the India-Myanmar Chamber of Commerce and from the Hong Kong Chamber of Commerce. And of course, a very warm welcome to Ms. Julia Charlton, Managing Partner of Charltons, for so kindly agreeing to address us today on how to, post-COVID, how to manage labor-intensive industry and the impact COVID-19 has had on labor-intensive industry in Myanmar. I think before I get into the details, I have the pleasure of first introducing Julia to all members of IMCC as well as the Hong Kong Chamber. Julia, of course, is a lawyer from King's College London and has been practicing as a solicitor in Hong Kong since 1987. So very, very experienced solicitor with over 30 years of experience. She was also named as the leading lawyer by Asia Law and Practice for the years 2002 to 2018, and indeed very commendable. She's also a long-standing member of the Listing Committee of the Stock Exchange of Hong Kong from 2012 to 2018. Currently, Julia is a member of the Takeovers Panel and Takeovers Appeal Panel of the Hong Kong Securities and Future Commission, and also a senior fellow of the Hong Kong Securities Institute and a member of the Common Law Committee of the Hong Kong Law Society. In fact, I was just having a chat with Julia before this webinar, and Charlton, the company that she manages, has been operating in Myanmar for the last 8 years. Charlton has a local setup here, and Julia has visited Myanmar many, many times, and she told me the last she visited was in January 2020, just before this COVID-19 happened. So she's very much connected with the country, knows the country very well. So we thought it's very important, both as IMCC and as Hong Kong Chamber, to get someone with her experience to talk to us on what she sees happening to labor-intensive industry post-COVID in Myanmar. And for Julia and her colleagues at Charlton, I just wanted to give a small brief about both our chambers. So IMCC is the India-Myanmar Chamber of Commerce. We were formed about nearly 2 years back, and we have about 116 members, Julia, as I was mentioning to you on the call that we had a little while ago, a good mix of Burmese and Indian companies. And the trade today between India and Myanmar is nearly $2 billion. So a lot of people would be wanting to listen to you. A lot of our companies are interested in agro space, in pharmaceuticals, in the IT industry and soft skills. As you know, these are core strengths of Indian companies. Most of the companies are involved in these businesses. The Hong Kong Chamber, and I'm very happy that Clara, who manages the affairs, day-to-day affairs, the way Brishti does for IMCC, coordinated very well with us. And Hong Kong Chamber has been there for the last 8 months, and they already have about over 65 members. And they have a good mix of Burmese, Hong Kong companies, as well as a lot of companies from the other nationalities. And between us, between the two chambers, we've actually been trying this to have joint programs. And I'm really happy that Clara and Brishti got together to put this small webinar for us. So with those words, Julia, I would leave the floor to you to take us through your presentation. And once you've presented your slides, then maybe we can take a Q&A and have a small concluding session. So thank you very much for taking time to address us, and over to you, Julia. Thank you.
Thank you very much, Mr. President, for the kind introduction. Myanmar has seen COVID-19 impact its people and economy in a number of ways. The impact has been direct in terms of actions taken in Myanmar, and indirect as a consequence of the impact of COVID around the world. A number of garment factories in Myanmar are shutting down or limiting their operations due to a shortage of raw materials, a consequence of the closure of factories in mainland China and cancelled and reduced orders from Europe and elsewhere. News emerged today that 622 SME factories and workplaces in the Mandalay area have actually reopened. So the situation is therefore a mixed picture. Transport links within Myanmar, such as buses, are severely curtailed, inhibiting and restricting internal commerce and the movement of people. As we all know, travel for foreigners into Myanmar has been suspended from late March, and temporary entry restrictions have been extended to the 15th of May and perhaps beyond. Meanwhile, supply chain disruptions and other developments are factoring into the decision-making process of investors looking at Myanmar, which is compounded by the fact that 26% of foreign direct investment in Myanmar comes from China. With Singapore, Thailand, India, and Hong Kong also significant investors in Myanmar, these countries are also feeling the strain of COVID, meaning that the impact on Myanmar's economy is undoubtedly significant. As for projects under China's Belt and Road Initiative, it's likely that the 4 major Myanmar projects, for example, the Muse Cross-Border Trade Zone and the China-Myanmar Economic Corridor, could be delayed or suspended, depending on China's economic situation, with both the Chinese and Myanmar governments focusing on tackling the pandemic and its social and economic impact. From my perspective, however, I do see some green shoots in China, with businesses starting up again, IPOs kicking off, and generally more levels of activity. So perhaps China will, to some extent, be able to help Myanmar and lead the way out of the current situation in terms of trade relations. Considering the impact COVID is having on Myanmar, I'm going to look at the impact on labor-intensive industries in particular, measures taken by the Myanmar government to support businesses, and some thoughts on the economic outlook going forward. So, labor-intensive industries in Myanmar. Myanmar has a labor force of 22.4 million people and offers a large pool of low-cost workers for foreign manufacturers, and has emerged as one of the most popular production bases in Southeast Asia for labor-intensive industries, namely industries that require substantial amounts of human labor to produce products, with notable examples being garment manufacturing and the assembly of toys and stationery articles. We can compare this to capital-intensive industries such as automotive and land machinery, which require huge amounts of capital expenditure. These are mainly based in special economic zones and have direct access to international and domestic markets. Myanmar's industrial policy prioritizes labor-intensive industries with a view to attracting foreign investment and creating employment opportunities within the country. And industry as a whole has grown to comprise 31% or so of Myanmar's GDP, of which manufacturing accounts for 75%. Comparatively, services comprise 42% and agriculture around 26%. This focus has been furthered by the Myanmar Investment Commission, who are now accelerating approvals for investments in labor-intensive and infrastructure projects in order to offset the impact of layoffs in other sectors such as manufacturing and tourism. On the 3rd of April, the MIC approved over $550 million for 11 new projects in the manufacturing, construction and services sectors, estimated to create over 3,000 new jobs, and more capital was injected into 13 existing projects. The manufacturing sector alone has grown significantly in terms of value since 2013-2014, from 18.7 trillion Myanmar kyats to 29.6 trillion in 2017-2018, with garment manufacturing alone growing rapidly, with exports up from less than $349 million in 2010 to $4.6 billion in the 2018-2019 financial year. Despite its growth over the past decade, the sector has been particularly hard hit by COVID, with factory closures in mainland China impacting the supply of raw materials and demand slumping in Europe, which accounts for 70% of the garments the country's garment exports, the US and elsewhere as the pandemic sweeps the world. Fruit exporters and tour operators have been equally hard hit, however, with garment factories, Myanmar's leading export earner. This is a particular cause for concern. Since January, Myanmar has seen the closure of 38 CMP factories, of which 22 were garment factories. Meanwhile, industrial zones anticipated closures of at least 30 factories, which would leave around 30,000 people out of work. Elsewhere, workers at factories still operating saw their monthly wages drop owing to cutbacks on overtime, which can ordinarily account for up to 1/3 of their monthly wage. Further, a Chinese-owned garment factory, Myanmar Royal Apollo in Yangon, declared bankruptcy on the 9th of March. The factory had opened in May 2016 with an investment of 400 million chats, but it suffered net losses of 400 million as of the 5th of March this year. Allegedly, the owners left without paying the workers any compensation. And while the factory is being sealed and equipment and assets are to be sold at auction to raise funds to compensate workers, this process may take many months. The closures are coupled with increased tensions between factories and union workers, resulting in thousands of workers going on strike. A notable example is the Myanmar factory in Yangon, which on the 28th of March terminated 520 union members and apparently withheld wages for March, citing decreased orders due to the impact of COVID. All non-union workers, apparently around 700, however, retained their jobs. In response, union workers set up a protest camp in front of the factory. They were offered compensation on the condition that they accepted termination and left the protest camp. And while many took the compensation and left, a small number remained. Meanwhile, workers from the General Enterprises garment factory, which laid off 8,000 of its 10,000 workers, and workers from the Lodestar factory, which laid off 400 workers, began protesting at South Dagon Industrial Zone on the 26th of March. Workers emphasized that they were not protesting for compensation, but protesting against dismissal, with some citing factory owners using the virus to lay off union workers. This sentiment was evident previously earlier in March when 12 labour rights groups formed a committee to support demands that the government verify factories were closing or suspending operations for genuine reasons, particularly given the lack of a social safety net in Myanmar to support workers who've been laid off. Elsewhere, Myanmar also saw garment workers staging demonstrations demanding factory owners temporarily close factories and provide them with paid leave for the month of April, owing to health concerns, with such workers supported by the Federation of Trade Unions of Burma. Subsequently, factories were then ordered to close until the 30th of April by an announcement on the 19th of April by the Ministry of Labour. It was noted that inspections were to be carried out to assess whether appropriate measures to prevent the spread of COVID had been adopted, with inspections carried out by the Ministry of Health and the Ministry of Labour, together with experts over the period from the 20th to the 30th of April, with those with approval allowed to reopen. Certain factories were prioritised for inspection. These were pharmaceutical factories, food production factories, and factories and workshops with a workforce of more than 1,000. While most factories are complying with the regulation, it was reported by the Confederation of Trade Unions of Myanmar that several garment factories were still open on the 22nd of April, and the State Councillor emphasised that the government would take action against these factories in accordance with the law. It's yet to be seen what sanctions they may face. As for factory owners complying with the regulation, the main problem was the question of workers' salaries during the period of closure, as the government announcement did not provide details or recommendations on whether salaries should be paid, and if so, by whom. This followed a previous deadlock between labour unions and the Ministry of Labour over the proposal to close factories for a month, with the Labour Union proposing that the Social Security Board pay 60% of salaries and employers the remaining 40%. With few employers able to pay 40% of salaries in the current climate, coupled with fears of factories not surviving beyond April, employers' concerns are significant, particularly in light of the importance of the garment manufacturing industry to Myanmar's economy. A balance between the needs of workers, the interests of factory owners, and the long-term health of the economy is highly desirable. The Ministry of Health then announced it would pay 40% of workers' salaries where factories had been closed since the 20th of April for inspection, but workers had to be registered with the government social safety net. Meanwhile, the Ministry of Social Welfare was reported to be providing support for workers registered with the Social Security Board, totaling more than 1.5 million nationwide, through provision of certain social security benefits. Garment workers also received support from the EU's 7.9 billion Chat Emergency Cash Fund. The first payments were made on the 4th of May to Myanmar's garment sector workers who had been terminated, suspended, or have faced significantly reduced hours in pay, less than half of regular. Looking forward, a further issue facing workers at a shoe factory and perhaps more factories as they begin to open is the prospect of eviction from their accommodation. The factory was recently given permission to open on the 7th of May following inspection. Prior to closing, a worker tested positive for COVID and another worker is now suffering symptoms. Given the factory is crowded and the majority of workers live in dormitories, they've allegedly been told they face eviction if they go to work. Alternatively, they may lose their jobs. In view of the mass layoffs, suspensions, and similar occurrences, it's important to consider the legal framework with which employers are having to navigate in this very difficult period of social and economic disruption. Based on the standard employment contract, the employer must have a basis for termination and give 1 month's notice to the employee. Grounds for termination include liquidation of the company or winding up of the business due to force majeure, with grounds for termination for cause typically listed in the work rules annex to the employment contract. In relation to mass layoffs, an employer may terminate an employee as a result of closure or necessary change or restructuring of the business, and any workforce reductions or terminations have to be effected in coordination with a workplace union and the workplace coordinating committee, or where no union exists in the workplace, coordination should be directly with the WCC. Where an employee has worked continuously, severance payments have to be made on the basis of their salary in accordance with a prescribed notification 84/2015 issued by the Ministry of Labour. And you can see these employment periods and severance allowances on this slide. Where, however, an employee is dismissed for misconduct, severance allowance is not payable. Whether or not employees receive the requisite compensation in all cases is clearly not a certainty. While some factories have committed to ensuring their workers receive what they're entitled to, others have left their workers without a job or an income. So what about measures to support businesses? Well, there's been a first round of measures, and bearing in mind the impact of COVID, the Working Committee to remedy economic repercussions caused by COVID was formed to consider measures to address the negative impact of COVID on Myanmar's economy. At the same time, the Ministry of Investment held a coordination meeting of the Working Committee. The Ministry of Planning then announced it would take certain steps to resolve the effects on the economy. These included CMP businesses, hotels and tourism companies, and small and medium-sized enterprises being categorized as priority sectors for remedial solutions. A COVID-19 fund will be established at the Myanmar Economic Bank with a capital of 100 billion chats, composed of 50 billion from the National Resolving Fund approved by the government and 50 billion from the Social Security Fund. Just to look at these in a little more detail. Notification number 1/2020, issued by the Ministry of Planning on the 18th of March, announced that CMP businesses, hotels and tourism companies and SMEs owned by Myanmar nationals, which are suffering the most negative economic consequences of the pandemic, would be entitled to tax assistance and loan entitlements. This came in the form of an extension of the payment periods for income tax and commercial tax for quarters ending on the 31st of March and June 30th, moved to the 30th of September 2020, And further, it was announced on the 17th of March that the 2% income tax levied in advance for exports would be waived until the end of 2019-2020 fiscal year on the 30th of September 2020. Loans were also made available from the fund to local businesses in key sectors, with the Union of Myanmar Federation of Chambers of Commerce and Industry and its state and regional offices accepting loan applications from the 30th of March to the 9th of April. The loans were available to CMP businesses, hotels, tourism companies, and SMEs owned by Myanmar nationals, with a loan period of 1 year and an interest rate of 1%, subject to adjustment depending on the severity of the economic loss incurred. As of the 4th of May, the government had approved loans for 200 affected businesses. However, over 4,000 had applied, which indicates a discrepancy in the provisions and demand for the emergency loan. And it may be that Myanmar may be considering scaling up the fiscal response, and I'll touch on this a little later. This relatively small number of approved loans may also be attributed to the discrepancies in the applicants' financial reports and the loan amounts that they're applying for, according to the chair of the Myanmar Tourism Entrepreneurs Association. And such discrepancies have made it difficult for the authorities to approve loans. In addition, certain criteria have to be met in order to be eligible for a loan, which may also be a factor in the relatively small number of approvals. So to be eligible, a company has to be locally owned and negatively impacted by COVID. It has to be currently running its business, have been established prior to the 31st of March 2018, have earned annual income over the last 2 years, and be in a possible situation to return the loan. It must use the loan only for the payment of salaries to staff and employees and the running of the current business. It must not be suspended or struck off the registration list of DICA. It has to pay income tax. It can't be permanently or temporarily shut down. It has to be regularly paying social security contributions, and the loan has to be guaranteed by the board of directors. As for the companies eligible, it's reported that only 20 qualify for funding of more than 100 million chats, including firms in manufacturing, trading, and industry. Of the tourism and hotel companies that qualify for financing, only one, apparently Inlay Princess, was eligible for a loan in excess of 100 million chats. The first condition, which related to foreign companies, is significant, as it excludes any foreign businesses, and currently there are no plans to extend loans to these businesses. In response, South Korean and Chinese stakeholders in particular have urged authorities to provide a stimulus package for foreign investors, particularly in the garment industry. This has regard not only to the stalling supply of raw materials, but also the sharp drop in orders from the West. European companies in Myanmar have also expressed concerns. There was a survey of the Yangon-based Eurochan Myanmar in March, which looked at the expected economic impact on European businesses operating in Myanmar. The results indicated that the majority are either significantly or moderately affected, with forecasted losses of revenue ranging from 30% to over 50%, with SMEs and those in manufacturing most severely impacted. European businesses also expressed their desire to see the Myanmar government take action. In particular, they urged faster import and customs clearance procedures, subsidies and relief for importers and exporters, and a corporate tax rebate for 2020. Certain measures have also been announced to aid businesses and boost investor interest. The Central Bank of Myanmar cut interest rates by 0.5% on the 12th of March, cut it a further 1% effective as of the 1st of April, and on 27th of April, a further 1.5% cut was announced, bringing the total rate cuts to 3% within 2 months. The Ministry of Hotels and Tourism announced license fee exemptions for tourism businesses, including hotels, tour agencies, tour guides, and hostels, from the 1st of April 2020 to the 31st of March 2021, in order to ensure the sustainable development of the hotel and tourism sector. The MIC announced on the 6th of April 2020 that it will accelerate approvals for healthcare and medical equipment businesses including those faced in manufacturing supplies, such as face masks, in addition to the acceleration of approvals for labour-intensive projects, as I mentioned before. On the 6th of April, microfinance and other non-bank financial institutions were instructed by the Ministry of Planning and Finance's Microfinance and Business Supervisory Committee to allow borrowers to defer repayments, with the majority consisting of small businesses and low-income workers hit by the economic fallout. The MIC announced car dealers would be granted a 2-month import license extension, allowing them to better manage the drop in demand for new imported vehicles. Typically, import licenses are renewed every 3 months, with a maximum of 1 2-month extension. On the 11th of April, the MIC exempted traders from import license fees for all medicines and medicinal raw materials, which took immediate effect. The MIC announced that application fees for investors wishing to apply for permission to invest would be halved, with the new fee structure taking effect from the 20th of April onwards and remaining effective until otherwise revised. On the 3rd of May, the Ministry of Labour announced a list of 21 businesses which are classified as essential public or necessary services. And these include state-owned factories and enterprises, businesses that supply water, businesses involved in electricity, fuel, energy production and transmission, providers of fire services, private hospitals, clinics and health care service providers, telecom service providers, information providers and technology businesses, transportation, warehousing and wholesale, port services, logistics and freight, export and import, municipal services, banking and finance, insurance, toll collections, printing and publishing businesses, mining and resources, chemical related firms, construction businesses and fisheries. Despite the measures, Myanmar's government has been under increasing pressure to scale up the stimulus package and mitigate economic fallout, with the emergency fund of 100 billion being seen as not sufficient and the policies generally not meeting the expectations of the business community. The fund accounted for less than 0.1% of Myanmar's GDP. By comparison, Cambodia, which has a smaller economy, pledged up to $2 billion US, and Bangladesh pledged $8.5 billion US, which is 3% of Bangladesh's GDP. On the 27th of April, the Ministry of Planning then announced a comprehensive COVID economic stimulus plan to mitigate economic impact and build foundations to try to facilitate rapid economic recovery. This plan has 7 goals: to improve the macroeconomic environment through monetary stimulus, ease the impact on the private sector through improvements to investment, trade and banking sectors, ease the impact on labourers and workers, ease the impact on households, promote innovative products and platforms, strengthen healthcare systems, and increase access to COVID response financing. Importantly, the plan may be revised as circumstances and events demand, which may provide useful flexibility in these uncertain times. I'll talk a little bit about Goal 2, easing the impact on the private sector through improvements to investment, trade and banking, and also touch on the additional measures for labourers and workers and the promotion of innovative products and platforms. In order to ease the impact on private sector firms, a number of measures were outlined, in particular the increase of the COVID fund from 100 billion to 200 to 500 billion before the end of the year, as had been previously called for. In relation to guarantee schemes, government guarantees are to be available before the end of the year to 50% of any new loans made by banks to Myanmar enterprises which are generating a turnover of up to 1 billion chats and which are not beneficiaries of other government spending schemes, and on condition of the maintenance or rehiring of staff employed on the 1st of February this year. Government guarantees are also to be extended to firms in high growth sectors which have been negatively impacted by COVID. The plan also details specific measures to support the agricultural sector, including cash or lending support for smallholder farmers who've lost revenue in order to support input purchases in time for monsoon planting, the establishment of rural cash for work programs to be implemented by the end of the year, and the facilitation of rice exports to maintain incentives for farmers to plant this season. The facilitation of rice exports is a significant area of focus. Over the past month, more than 5,000 tons of rice have piled up at the Myanmar-China border, with the Chinese authorities temporarily suspending imports without certificates from the General Administration of Quality Supervision, Inspection and Quarantine of the PRC. Similar scenes have occurred in a town in Myanmar near to Yunnan province, with Chinese authorities restricting drivers from entering and preventing the transport of around 300 trucks that ordinarily transport bananas and watermelons to China every day. Looking forward, though, it does seem that rice exports may be resuming at regular volumes in May, as according to the Myanmar Rice Foundation, 100,000 tons are to be shipped overseas, with the remainder to be traded at the border. China's also issued letters recently to Chinese companies permitting them to import up to 5 times more rice than the amount purchased last year, an increase from 50,000 tons to 250,000 tons. In addition, the MRF is also reportedly in negotiations with ASEAN countries regarding export arrangements. Measures aimed at supporting the agricultural sector are extremely welcome, particularly given the fact that Myanmar is largely an agricultural country. Economists have, however, asked for more focus on the agriculture and livestock sectors, which affect long-term food security. In addition, the sector comprises around 25% of Myanmar's GDP and employs a majority of the population. In relation to promoting investment, plans to expedite the solicitation of projects, expedite the investment approval process, and simplify the procurement process and ramp up government spending have also been outlined. With a view to promoting international trade, the plan aims to establish a 100 million chat fund to designated commercial banks to promote trade financing and the facilitation of the import process for medical related products and the waiver of FDA requirements, provided that the relevant Food and Drug Administration in the other country has actually approved the products, and the review of all export applications, licenses and permits. The third goal aims to ease the impact on labourers and workers. And in addition to the extension of labour benefits for the unemployed, the plan outlines the intention to implement labour-intensive community infrastructure projects for those laid off or returning migrants, with the intention to implement these before the end of the year. And as I noted before, the Myanmar government has also recently approved a number of labour-intensive industry projects, which are anticipated to create thousands of new jobs. Another goal aims to promote innovative products and platforms, mainly mobile payment services and local and overseas e-commerce and social commerce systems. The plan also sets out the intention to develop a central e-commerce website for retail businesses before the end of the year. This may be welcome given the fact that retail business owners, particularly in Yangon, have expressed concerns over rent levels in Yangon malls, which they say remain high, despite the drop in footfall and demand. But in fact, some malls have reduced rent by 20 to 25% and even 80% in some cases. But at the same time, retailers are still pushing forward with plans to sell via online platforms. And I think this should also be seen in the context of the quite phenomenal strides Myanmar has made since around 2012 to increase internet penetration levels throughout the country, which are now on a level with a number of other ASEAN countries. In terms of external support, Myanmar has looked to the World Bank and IMF for financing options. The World Bank announced on the 20th of April the approval of $50 million of loans for the Myanmar COVID emergency response project, which focuses on upscaling intensive care units, capacity building and community engagement activities. The project complements the World Bank financed Myanmar Essential Health Services Access Project, which has been supporting over 12,000 primary healthcare facilities across Myanmar since 2015. In addition, the World Bank Group is taking action to assist developing countries generally to strengthen their pandemic response, increase disease surveillance, improve public health intervention, and help the private sector continue to operate with a view to sustaining jobs. And it's deploying up to $160 million in financial support over the next 15 months to help countries support businesses and bolster economic recovery. In relation to the IMF, according to the CBM governor, while domestic demand is sufficient to support the economy in the short term, the CBM and the Ministry of Planning were considering applying for financing options from the IMF, with applications being prepared for the IMF's Rapid Credit Facility and the Rapid Financing Instrument. So the economic outlook for Myanmar. Well, undeniably, the effects of COVID will be long felt in Myanmar, as it will, of course, around the world. With travel and border restrictions in place, the impact will be felt most significantly by tourism-related services, agricultural exports to China, and the garment sector manufacturing, which accounts for 13% of Myanmar's exports. While the manufacturing sector is anticipated to restart as the crisis recedes, the tourism sector will take much longer to rehabilitate, with bookings already down by 50% as of the end of February this year. With tourism an important part of sustainable development for Myanmar, and with SMEs making up the majority of this sector, this is an important area of focus for Myanmar's recovery. To support the hard-hit industry, the UN World Trade Tourism Organization is providing support and guidance for recovery measures, and preparations are also underway to revive the industry post-COVID with, for example, the community-based tourism program in the Irrawaddy region, which is preparing to provide better quality services to visitors. It may well be, however, that it will be domestic tourism within Myanmar, and possibly tourism from China when China's economy recovers, which may lead the way in the tourism sector. The IMF forecasts Myanmar's economy will still grow in 2020, with a growth forecast of 1.8%, down from its earlier forecast for 2020 of 6.4%. And this takes into account the widespread factory closures and the numbers of workers out of jobs. I think we should remember that this is actually a relatively positive picture. Many economies in the world are forecast to be contracting overall in 2020. And Hong Kong, for example, has already suffered a nearly 9% contraction in its economy in the first quarter of 2020. How the situation will in fact pan out does, however, depend on a number of factors, of course, and these would include the extent of fiscal measures, which will determine how far any permanent damage is offset, with the IMF emphasizing the need for large, timely, temporary and targeted fiscal measures, and the extent to which major economies of the world, the US, Europe and China, will have their outbreaks under control in the next 3 to 6 months, and of course, whether there will be further spikes and further outbreaks of COVID in the months and years to come. So the economic outlook is far from certain, but strong coordinated efforts, as suggested by the ADB's chief economist, are likely to be key to minimizing economic impact. Support from abroad and investment are also factors for Myanmar's economic outlook. On the one hand, we've seen delays in some projects, such as the extension of the request for proposal for the $1 billion Yangon Elevated Expressway project, owing to bidders from China, Japan, and South Korea dealing with domestic COVID outbreaks, the withdrawal of the Wuhan-based consortium from the bidding for the project, the delay of the $8 to $10 billion development of the Darway Special Economic Zone, the delay of the $137 million road linking Myanmar and Thailand. However, there's also perhaps room for some optimism, with commitments to developments reiterated and support from foreign institutions, including approximately $5.5 million aid package for garment workers from the European Union, announced on the 9th of April, in the light of collapsed demand for products, with previously 70% of exports going to European countries. However, I think we should at the same time consider that the EU actually just this week announced that it would be placing Myanmar on the anti-money laundering blacklist, which of course will not make it easier for Myanmar to conduct international trade and so on, as it will affect the attitude of overseas banks to Myanmar trade. The Japan International Cooperation Agency announced plans on the 25th of March to move ahead with infrastructure, urban, sewerage and power distribution projects, for which a $1.1 billion loan agreement was signed in January this year. There is still the anticipated completion of an airport in Chin State this month, with 300 workers being retained and currently isolating at the construction site. The Chinese Foreign Ministry announced a $6.78 million are to be provided for 22 Myanmar projects under the Beijing-led Cooperation Initiative. There was an announcement by the Chinese ambassador to Myanmar, Chen Hai, that the 33 agreements signed during President Xi's visit in January under the China-Myanmar Economic Corridor and the Belt and Road Initiative would continue to implementation stage. And South Korea has reiterated its commitment to infrastructure projects in Myanmar post-COVID, which notably include the $154 million Yangon-Dala Bridge, $125 million railway upgrade, and the South Korea-Myanmar industrial complex. While the Myanmar government do seem to be working to ensure that foreign investment continues to flow into the country, it's clearly important that a medium-term economic plan is carefully formulated, which could only be of assistance in the light of the uncertainty in the months to come. So ultimately, the impact of COVID on Myanmar and Myanmar's labor-intensive industries is clearly significant. The government initially took incremental action, but it soon became clear that a more sweeping fiscal response was necessary to offset any long-term economic damage. With monsoon season approaching in Myanmar, bringing with it public health challenges on top of COVID, Myanmar may also see its health systems and disaster response systems put under further strain. And this, no doubt, will result in the government rising to further challenges and providing appropriate responses. So the situation in Myanmar, as I've said, is really a mixed picture, with Myanmar by no means amongst the countries worst affected in the world by COVID. And it does seem that the measures taken to date are being relatively effective. Certainly, considering the reported figures of COVID cases being relatively under control, and with the government stepping up their response measures, Myanmar is by no means the worst off country affected by this terrible pandemic currently sweeping the world. So, ladies and gentlemen, that concludes my talk this afternoon. And if any of you have questions, do feel free to email us. We will do our best to respond. And now I would like to pass back to the President of the India-Myanmar Chamber of Commerce, who's going to make some concluding remarks. Thank you all very much.
Thank you very much, Julia. I think it was a very, very useful session, I must say. Your message went down very well, and I think you covered the most important sectors, which I feel, at least for Indian businessmen as well as for Hong Kong Chamber, were very relevant as far as Myanmar economy is concerned, which is agro, pharmaceutical, garments, and I think you gave a very good perspective on what the government is doing post-COVID to sort of stay afloat. And I agree with you that this number of 1.8% GDP growth in 2020, even though the base of the Myanmar economy is just about $70 billion, is still good news, I would say, for most businesses, considering what's happening in some of the other countries. The only other remark I wanted to make is that for both Indian companies and for members from the Hong Kong Chamber, I would urge all members to also look at the project bank very carefully. That was something which, of course, post-COVID was announced in details. There were about 15 to 20 projects that government of Myanmar announced, and mostly in areas of road construction as well as railway upgradation. You also spoke about the elevated Yangon highway, and I had sort of done a mental math and added up those numbers, and those were upwards of $10 billion. So there is a huge amount of projects that the government had thought through post-COVID, and hopefully if the cases remain under control, I think the government is doing a fantastic job in terms of testing, in terms of contact tracing, in terms of enforcing that people maintain social distancing and stuff like that. And with a touch wood, just about 165 cases till now. We hope that it remains like this, and in a phased manner, construction activity also starts picking up, besides of course trade. So I think it was a very, very useful session, and I think we'll be in touch. Julia, we will come back, talk to members, and if there are any other topics of interest to our members, we will certainly get back to you. So thank you very much, and we'll be in touch. And a special thanks to both Brishti and Clara to have worked along with Julia's team to put up this webinar very nicely. So thank you all, and be safe and keep washing your hands. Thank you. Bye-bye.